Come on, baby. Come on. You can do it. Let's go. Oh my. Oh my, it's so bad. It's so bad.
Welcome back, folks, in another day in the life of a minimalist millennial.
Where I do homebrew, no Starbucks. And I drive an extremely frugal, cheap Hyundai.
But as I do, folks, today I'm going to be updating you on some of the stocks surrounding my 300K portfolio. But first, I want to take you back in time through a little story on this whiteboard you see in all of my videos.
This chart represents the trials and tribulations of my financial independence to perhaps one day retire early. My fire journey here, folks, and I thought it'd be fun to just kind of brief you on the insanity I could have never predicted unfolding that started all the way back into April of 2017, where I decided I was going to start documenting this month over month and holding myself accountable with $55,390. And right at this time, I purchased a car that I was using for my work. It was about a $12,000 Dodge Charger, and unfortunately that hindered any of my growth because back then I wasn't making the most of money. But luckily I had some good holdings, some things like Canopy Growth Corp, which we might recall the legalization of MJ products in 2018 that sent that stock to the bloody moon, was my first real big win, multi-bagger. It was super awesome, folks. But then obviously there was a bit of a market drop apparently at the beginning of 2018, but a lot of work in my business started picking up when I was a full-time magician, DJ, story for a different day, and I was actually just reinvesting the dividends. Things were really good. I had a really good growth. And this is where I started introducing and tracking my dividend income. That's what this red line represents, the growth of my dividends. And as we continue to grow here, guys, what do we have? Another market drop in roughly going into beginning of 2019 here, where I was paying some taxes. There was the Trump tariff thing apparently going on here, and things were kind of flatlining for a little while until I had another really good win with Tesla, and the market started to rally pretty significantly going into 2020 here, folks. And you can see all the way through these few years, the growth of my portfolio was roughly 52% in the first year, 23% in the second year, 25% in the third year. And this is where things get nutty, right? So this is why they always say that people tend to get richer when the market crashes if you understand what you're doing, which I don't know if I understood what I was doing, but things kind of went off the chart. I made an 87.69% return in 2020. Absolutely incredible stuff. Watching my portfolio go from a peak of $130,000 and it dropped. And I know I put a little dot here because I calculated the lowest point was about $112,000, which was pretty significant. But then somehow things got pretty intense here, folks, where today I'm completely off the charts. I'm sitting on roughly, the last time I calculated was about 291,000, but we are well surpassed that at this point, folks. I haven't done a full update in the last week and a half, but I know I'm sitting right on that line, if not over this insane 300K mark, with my primary goal going into 2022 of being about 250K.
So hard work and due diligence clearly pays off, and I hope this comes as somewhat motivation, especially to people in our chat groups. But I want to update you on some of my highest conviction stocks, update you on some of the surrounding news with my portfolio, a lot of the stuff that has helped me get to where I am. And we're going to start it off with Riocan here. I currently own 1,550 shares, I believe, of this company at almost an exact cost price of around $17.20 or 30 cents. I'm setting up over $8,000 just in capital gains alone. Total positions like 34K right now. And on top of that, it is just beautifully dripping out something like $120 or so a month into my pocket in cash flow. Wonderful, wonderful stuff on the return here, considering this has all happened within about a year span since we've been gobbling it up here in the crash. Now, we are not to all-time highs yet. And do I see Riocan getting back there? It should be fascinating because I bought this position in the crash saying, hey, look, I'm not even going to touch this until we get to about the third to fourth quarter of this year when everything unlocks and, people can go back to restaurants, which is only just happening now. So in this next coming earnings, the only reason I expect to see like really good numbers, and I'm going to break this down because some of this was relatively confusing, and that is coming from the recent news filings here, folks, where they basically said that Riocan established additional sources of capital and income streams through a new partnership structure for its mixed-use residential condominium project. And this came as a bit of a surprise to me because we're going to go through some math here, but let me read this through real quick. As it says, this approach exemplifies by the trust's recent sale of an 80% interest in the Verge condos, a mixed-use residential condo development along the Queensway in Toronto, to a newly formed partnership. This agreement partners Riocan with recognized institutional investors, whereby the trust retains a 20% interest and maintains project oversight as general partner and sole development manager. The partnership structure enables Riocan to monetize 80% of the land density value that is created through a successful entitlement process. Verge will consist of 2 condo towers totaling 545 units, including 12 affordable rental units. And just skipping down here, guys, because like I said, the math gets kind of weird here, and let me explain why. Structured a limited partnership with 4 institutional investors, 4 investors, resulting in sale proceeds of $30.4 million, including a reimbursement of its shares of development costs incurred to date. So not only are they paying the $30.4 million, but they're going to reimburse for a lot of the money that they already pumped into this project. This is something that is only just going to be going up into development. But if you run the math here, it's kind of confusing, because if you take 545 units, excluding the 12 affordable rental units that come along with that, just doing a little bit of math, 80% of the ownership that was taken was about 436 units. And if you divide that out by that 30.4 million or whatever it was, you end up with about 69,000 a unit, which again, doesn't make a whole lot of sense. 69K a unit in downtown Toronto when condos are going for anywhere from like 500 to like 800,000. How does that make any sense? I really think this is Riocan just kind of protecting their short term by stacking up capital and really focusing on some core positions here. But this really kind of came as a shock to me that they were divesting from this, and it can only be because they don't want to incur the development costs, and they found investors that are looking to. So basically Riocan gets to keep a pretty cut of the penny on the condo sales, while also basically just getting a ton of proceeds up front to let them incur what is probably going to cost a lot more in this environment. Maybe, I don't know, condo buildings are in a mixed place right now, and I just found it relatively interesting. So I want to know what you think about that, particularly in that comment section. But putting the Riocan news aside, just because it's my largest holding, and I really believe that the company is still going to exceed into the coming quarters just because things are unlocking here. But anyways, well, let's take a look at my business account real quick here, folks, because this is the last thing I want to touch base on today. Thanks to the FANG stocks going to the moon and back, we've seen a good rally up in Tesla, Facebook, and Google this month, considering I only had to rebuy them back since I've opened this corporate account, just proving that tech stocks are still on fire, baby. I am looking, hopefully, in the coming month here to particularly continue scaling my Google position while also adding Amazon to this account. This account is just going to be an incredible growth story, and I'm glad that I can document it here for you guys, because I'm going to talk to you more in depthly about how this is just basically diverting a lot of my taxes by getting this account out of my name, protecting this capital further, and it's going to be really neat. And I'm trying to focus quarterly on my growth stocks, because that's where I'm going to end up taking the most capital gains. And in an account like this, a corporate account, I will be paying a lot less tax. So I know this was just kind of a skim overview of what's been going on, but this is some of the more exciting stuff surrounding the portfolio, and I will be doing further updates in the future, so consider subscribing. But stay cool, stay awesome, and I look forward to catching you tomorrow.